Okay, Godrej Properties, let's cut across to the press conference.
58% on a top line perspective. Our EBITDA has grown by about 63% and our net profit by 24%. Our margins have also improved to about 29%, and we've been able to reduce debt this quarter by over 100 crore. From an operational perspective, we've had a very good quarter. From a bookings point of view, we grew in value terms by about 85%, which takes the 9-month year-to-date growth on bookings perspective to 160%. This has been driven largely by the continuing success of our new launches. So in Q3, we had 4 new launches across the 3 very important markets for us of Mumbai, NCR and Bangalore. In Mumbai, we launched the 3rd phase of our project in Vikhroli, Godrej Platinum. That has seen very good volumes, and we've actually increased prices over a 12-month period by about 40% in that project. Similarly, our project Godrej Summit in Gurgaon has seen very strong success. We, as some of you know, launched that project in September and sold about 1 million square feet on the first day that we launched the project. For the 2nd phase, our intent has been to push prices up and focus more on margins, and we've done that quite successfully at prices about 25% higher than our first phase prices. We've sold another 100,000 square feet of space in that project. And the 3rd city where we actually had 2 launches this quarter was Bangalore. And here again, the launches have done very well, particularly our project Godrej E-City, where we sold about 375,000 square feet of space in Q3. That project was launched at the beginning of the quarter. Actually, the response was well beyond what we were expecting, so we launched a 2nd phase of that project within the same quarter, which hadn't initially been planned. So I think that has also gone very well. From a new business development perspective, we also saw some success in the 3rd quarter. We added 1 new redevelopment project in Mumbai, in Curry Road, and that project we hope to launch over the next 12 months. And actually, with this new redevelopment project in the last quarter of calendar year 2012, we've actually been successful in adding at least 1 new project in each of the quarters of calendar year 2012. So I think that shows good momentum in the redevelopment space for Godrej Properties. There have been a number of other highlights for the quarter, which I'm sure we can we'll discuss in the Q&A. But I think broadly we've ended 2012 on a strong note, and we're very optimistic about the potential that lies ahead for 2013. I think from a macro environment perspective, we expect 2013 to be a much more supportive year than 2012 was. As you all know, I think the government has taken some really strong steps now in reigniting the reform process in India. I think that will do a great deal to improve business and economic sentiment. Also, the RBI's important move of lowering interest rates and the cash reserve ratio, we think signals the beginning of the interest rate cycle turning, and that too will be tremendously beneficial for the Indian economy as a whole, for the real estate sector in particular, and certainly for all of us at Godrej Properties. So with that, we're very happy to take any questions you may have.
You just mentioned that you raised prices in certain projects. So could you just share with us going forward, do you see any scope of raising your prices and to improve margins for this?
Well, I think, broadly speaking, we think prices can and will move up for Indian real estate. We don't expect necessarily for them to move up by the kind of magnitude I spoke about in some of our projects. But certainly the idea that there is a high likelihood of prices correcting in India, we don't think there is much justification for. We think the economic cycle, as I said, has troughed out. We think interest rates coming down will greatly improve affordability for customers. GDP growth coming back in will greatly improve customers' confidence in coming back into the real estate market. So broadly speaking, I would expect to see moderate pickups in real estate prices across the country. But I think more important for us, what we hope to see in 2013 is a much stronger return of volumes. While we've been quite successful at Godrej Properties through new launches in accelerating our volumes, I think for the sector as a whole, there clearly is a concern that volumes are lower than we'd like to see for the sector. And more important than price increases again will be customers coming back in volumes returning to the sector.
debt level of the company?
It's about, the net debt of the company is about 1,500 crore.
Do you have any plans to reduce debt in the next 3 months or any kind of guidance? And a couple of questions about how much did you launch in Summit Phase 2? And if you could share some numbers about those two.
Sure. So I'll start with the two project questions. For Godrej Summit, we launched about 150,000 square feet of space. We sold about 110,000 of that. As I mentioned, the price difference that we took when we launched the second phase in November over September pricing was about 25%. So that's gone very well for us. In Godrej E-City, we launched the project at about 3,000 and current prices there are about 3,500. We've sold, as I said, 375,000 square feet of space by the end of Q3 in that project. Most of that is from the first phase because we launched the second phase of that project right at the end of the quarter. And on the question on debt, as we've said, we're quite comfortable with where our debt levels stand. There's been a further 100 crore reduction in Q3 through operating cash flow. If you compare our debt equity ratio at the beginning of calendar year 2012 and at the end of calendar year 2012, there's a difference of 2:1, which has now been brought to 1:1. We have always guided that we are quite comfortable operating with a debt equity level anywhere between 1 to 1.5:1. So currently, actually, our debt level is below even our lower end target. We may look at further reducing that, as I've also said, because we're looking at focusing more on residential projects which inherently are easier to manage from a cash flow perspective. So I certainly think there will be further opportunities in 2013 to further strengthen our balance sheet, but as I've also said, that to us is not a critical priority at the moment.
So Dutch pension fund has invested in any kind of project? Because it's almost 1 year is going.
No, it's not almost 1 year. That partnership was concluded in June, so it's about 6 months. As we've said, the time frame for investments through that partnership is 24 months. So the first investment has not yet been done, but we do expect to close that soon. Purchasing land or making investments in real estate projects does take its own time. These are not things that we would like to rush into and then find that there are problems at a later date. So I think that platform is very much on track. We are evaluating many current opportunities, but we haven't closed any project as of now.
All right, those are the Godrej third quarter numbers coming in, and of course the management explaining the numbers to you and breaking down the 2013 forecast for the market as well. Let's talk about commodities now. And